The biggest event this week was Fed Chair Jerome Powell's speech at Jackson Hole Symposium. And Powell did come out basically dovish, saying that there is a rate cut on the table for September, pretty much guaranteed actually. And, he didn't necessarily commit to the size of the cut or how many cuts there will be, but he did say they're confident that inflation's finally getting toward that 2% target. And Powell also, spoke about his concerns about the labor market, which is going to influence the size of the cut. And we'll see some upcoming data that'll dictate that, but this is what we've been waiting to see. Earlier this week, we saw a significant revision to the labor market data. Basically, QCEW benchmark revisions showed an additional 818,000 downward adjustment in job numbers. So those were jobs that were named but didn't happen. And this is a major change that shows the job market just hasn't been as strong as was being reported, and that's something that we've been talking about. And while the Fed didn't acknowledge this revision in Powell's speech, it probably will play a role in their decisions in the coming months, especially with the next jobs report that's going to come out on September 6th. The housing market, still very tight, almost no inventory here in San Diego at least. And with new home sales in July showing an increase in sales pace, we're still seeing low supply. And this pent-up demand is likely due to the higher mortgage rates we've been seeing. And as rates come down, of course, we're going to see more buyers enter or re-enter and saturate the market more than it already is. If you need help getting your offers accepted and standing out in this market, just say the word. We do have tools for you. Market is now pricing in a total of 100 basis points in cuts by the end of the year, and they're expecting another 125 basis points next year, but you can take that with a grain of salt. Obviously, a lot can change between now and then. The September 6th jobs report will be a really big part of whether we see a 25 or 50 basis point cut next month. And we are going to get important readings from PCE as well as CPI before that decision, but the jobs report is expected to really be most important in that decision. Next week, we're going to see another reading for Q2 GDP, and we'll also get PCE inflation. That's the Fed's favorite measure of inflation. And, these reports are important, but we likely won't see a major swing in rates. But I appreciate you tuning into this. Have a great weekend, and we'll talk to you next Friday. If you have any questions or there's anything we could do for you, feel free to reach out.